Hello, and welcome back to the channel. I'm Algabot, and today we're taking a close, educational look at an automated strategy for MetaTrader 5 called Williams Fractal Trend Breakout. This expert advisor blends two classic ideas: Bill Williams fractals to map the market swing points, and a pair of moving averages to read the trend. Over the next few minutes, we'll break down exactly how it decides to place a trade, how it manages risk with the average true range, and how it all looks on a live chart. Remember, everything here is for learning only and not financial advice. Let's get started. So what exactly does the Williams Fractal Trend Breakout Expert Advisor do? At its heart, this is a trend-filtered breakout strategy. Rather than trying to buy dips or catch reversals, it waits patiently for the market to push decisively beyond a recent swing point, and it only acts when that move agrees with the broader trend. The first building block is the Williams fractal. A fractal is simply a confirmed swing point. An up fractal is a bar whose high stands above the highs of a set number of bars on either side, by default, 2 bars on each side. That marks a genuine swing high. A down fractal is the mirror image, a confirmed swing low. Because the pattern needs bars on both sides to confirm, it naturally lags a little, and that lag is exactly what filters out random noise. The second building block is a trend filter made from 2 exponential moving averages of the closing price, a fast average of 20 periods and a slow average of 50. When the fast average sits above the slow, the strategy reads the market as an uptrend and considers only long breakouts. When the fast average is below the slow, it reads a downtrend and considers only short breakouts. The third building block is the average true range, or ATR, which measures how much the market is currently moving. The strategy uses ATR to size its stop loss and take profit, so it automatically adapts to calm or volatile conditions. Because every calculation is tied to whatever chart it runs on, this approach isn't locked to a single symbol or time frame. It was designed with liquid, trending markets in mind, such as major currency pairs, gold, or indices. It may appeal to traders who prefer a rules-based, patient style over constant activity. As always, this is educational information only, and trading involves real risk. Let's walk through the mechanics step by step, exactly as the code lays them out. The expert advisor does all of its thinking once per completed bar. It ignores the noise of every passing tick and only evaluates its rules when a bar has fully closed, which keeps its decisions clean and repeatable. On each newly closed bar, the strategy first looks back to see whether a fresh fractal has just been confirmed. The center bar of the pattern sits a fixed number of bars back, the FractalWing, which defaults to 2. If that center bar's high is above the highs on both sides, the strategy records a new swing high and marks it as the active long breakout level. If its low is below the lows on both sides, it records a new swing low as the active short breakout level. Next comes the trend filter. The strategy calculates the fast and slow exponential moving averages on the closing prices. If the fast average is above the slow, only long setups are considered. If the fast is below the slow, only short setups are considered. This single check keeps the strategy aligned with the prevailing direction and stops it from working against the trend. Then the strategy checks whether it already holds a position for this symbol. It allows only one open trade at a time, so it never stacks positions on top of each other. Now the entry logic. For a long, 2 things must line up on that closed bar. The trend must be up, and the closing price must be above the most recent swing high. When both are true, the strategy signals a buy. For a short, the trend must be down and the close must be below the most recent swing low, and the strategy signals a sell. Importantly, once a level is used, it is consumed, so the same swing is never traded twice. The strategy then waits for a fresh fractal before considering that direction again. Finally, risk management. Every trade is protected the moment it opens. The stop loss is placed at a distance of 1.5 times the ATR from entry, and the take profit at 3 times the ATR. That builds in a reward to risk of 2 to 1, and because it's based on ATR, the distances expand and contract with market volatility. Trading always carries risk, and losses are a normal part of any strategy. Let's look at the actual MQL5 code as it appears in Meta Editor. At the top are the input parameters, the dials you can adjust before running the expert advisor. FractalWing sets how many bars sit on each side of a swing, defaulting to 2. FastEma and SlowEma define the 20 and 50 period trend averages. ATR period, ATR-SL multiple, and ATR-TP multiple control the volatility-based stop and target at 14 periods with multiples of 1.5 and 3. Lots sets the trade size, and magic is the identifier the expert advisor uses to recognize its own trades. Now the long block. The condition reads, if uptrend and the up level is active, and the close is above that up level. When all three are true, the code reads the current ask price, sets the stop loss at the ask minus the ATR stop multiple, and the take profit at the ask plus the ATR take multiple. It then calls trade.buy with the lot size and those levels. After that, it marks the up level as used, so it won't be repeated. The short block is the exact mirror. If downtrend and the down level is active, and the close is below that down level, the code reads the bid price, places the stop loss above at the bid plus the ATR stop multiple, and the take profit below at the bid minus the take multiple. It then calls trade.sell with the same sizing. Both sides normalize the prices to the symbol's digits so the broker accepts them cleanly. Notice how compact and symmetrical the two sides are. The same idea, simply flipped in direction. This walkthrough is for educational purposes only. Let's bring the whole idea to life on a chart. What you're seeing is an illustrative pound-dollar sequence, with two moving averages drawn over the price, the faster 20-period average in blue and the slower 50-period average in gold. This is a purely educational example built to show the logic, not a record of real trades. We begin on the left in a market that's just starting to turn higher. For the first couple of bars, the fast average is still below the slow one, so the strategy stays on the sidelines. Then, around the third bar, the fast average crosses above the slow average. That crossover is the trend filter switching to an uptrend, and from this point the strategy will only look for long breakouts. As price pushes up, it prints a clear peak, a swing high. Watch how the two bars after it make lower highs, which is exactly what confirms the fractal, since we need two bars on each side. The strategy records that high as its active long breakout level, drawn here as the horizontal reference line at 1.2732. This is the line price now needs to close above. Price pulls back gently for a bar or two, coiling just beneath that level. Then a strong bar closes decisively above 1.2732. That's both conditions satisfied at once, an uptrend and a close beyond the swing high. So the strategy signals a long, shown by the buy entry marker. Notice the stop loss sits below the breakout, a distance set by the ATR, while the take profit target sits well above, at twice that distance, giving a reward to risk of 2 to 1. From there, momentum carries price higher over the next couple of bars, and it reaches the take profit target. The long trade closes in profit in this illustration, and just as importantly, the level that started it has been consumed, so it won't be reused. Now the character of the market changes. Price stalls at the highs and begins to roll over. The fast average turns down and crosses back below the slow average. The trend filter has flipped to a downtrend, and the strategy now looks only for short breakouts. As price falls, it carves out a fresh low, a swing low. Again, the two bars that follow make higher lows, confirming the down fractal. The strategy records that low as its active short breakout level, drawn as the reference line at 1.2722. Price bounces back toward it. Then a firm bearish bar closes below 1.2722. With the trend already down and the close beneath the swing low, the strategy signals a short, marked by the sell entry marker. Here the stop loss sits just above the swing low, again an ATR-based distance, and the take profit target sits well below. Price then slides lower through the following bars until it reaches that take profit target, and the short trade closes in this example. Notice the rhythm across both trades. Wait for the trend, wait for a confirmed swing, wait for a decisive close beyond it. Then let the ATR define the risk and reward. That patient, repeatable sequence is the entire personality of this strategy. And of course, not every breakout follows through this cleanly in real markets, which is why disciplined risk control matters on every single trade. That brings us to the end of our educational breakdown of the Williams Fractal Trend Breakout Expert Advisor. We covered how it maps swing points with Williams fractals, how it uses a fast and slow-moving average to stay on the right side of the trend, how it enters only on a confirmed close beyond a swing, and how it sizes its stop loss and take profit with the ATR. Everything we discuss today is for educational purposes only and is not financial advice, a recommendation, or a solicitation to trade. Trading carries real risk, and losses do happen. If you found this helpful, please like the video, leave a comment with the strategy you'd like us to analyze next, and subscribe for more MetaTrader 5 strategy breakdowns. You can find more at www.algobot.live. Past performance does not guarantee future results. Trade responsibly.